What if the biggest risk to crypto is actually becoming its biggest catalyst? Quantum threats rising, cyber attacks increasing, institutions stepping in, and quietly, the foundation is getting stronger. Welcome to Ledger Pulse, where we break down the signals that actually matter. Nothing in this video is financial advice. This is for informational and entertainment purposes only. If you want clear, signal-focused breakdowns without the noise, you're in the right place. Let's get into it. Let's start with something that sounds bearish on the surface, but might not be. A report highlighted that the number of qubits required to attack Bitcoin and Ethereum has dropped 10x since February, largely due to advances in AI. Now, at first glance, that sounds like a serious problem. But zoom out for a second, because this doesn't mean crypto is suddenly vulnerable. It means the timeline is becoming clearer. And when timelines become clearer, industries adapt. We've seen this before. Internet security evolved, banking systems evolved, encryption standards evolved. Crypto will too. In fact, this kind of pressure often accelerates innovation. The real takeaway here isn't fear, it's urgency. And urgency tends to bring better security, faster development, and institutional involvement, which is exactly what we're starting to see. Now, this connects directly to this next development. The US Treasury is now warning that cyber threats targeting digital assets are increasing in both frequency and sophistication, and they're launching initiatives to share threat intelligence with crypto firms. Again, sounds negative, right? But look deeper. This is the US government acknowledging crypto at scale, getting involved in security infrastructure, and coordinating with the industry. That's not fear, that's integration. Institutions don't step in to protect something they think is going away. They step in when something becomes systemically important. And this is exactly how traditional finance evolved. Risk appears, infrastructure is built, capital follows. Now let's move into what's being built, because this is where things get interesting. A post highlighted Evernode's Everett, a framework designed to deploy AI agents on decentralized infrastructure. In simple terms, AI agents running on decentralized compute built on XRPL-related infrastructure. And deployment is being simplified to essentially a one-click system. That's a big deal, because one of the biggest barriers in crypto has always been complexity. Now we're seeing simplification plus automation. This is where narratives converge. AI, decentralization, and automation. And when technologies converge, adoption tends to accelerate. Now let's talk about something that got a lot of attention, the XRPL Attackathon report. At first glance, the numbers look concerning. Dozens of critical and high-level findings, hundreds of reports submitted, but here's what actually matters. These vulnerabilities were identified, reviewed, fixed, and audited before large-scale deployment, and over 100 security researchers participated. This is exactly what you want to see, not perfection, but stress testing at scale before adoption. Because systems don't fail when problems are found, they fail when problems are hidden. Now let's move into real-world usage. We're seeing reports that Euro stablecoins, tokenized gold, and money market funds are all moving onto the XRP ledger. Major institutions like Societe Generale, I hope I said that right, and others are entering this space. And with upcoming lending protocols, every asset on XRPL could potentially generate yield. This is a shift from speculation to functionality. Because once assets live on-chain, generate yield, and move globally, you're no longer just trading crypto. You're building a financial system. Then we have partnerships forming behind the scenes. Oceanus and Hashkey working with Ripple on trade finance, stablecoin settlement, and cross-border infrastructure. These aren't hype announcements. They are plumbing-level integrations. Most people focus on price, but price follows infrastructure, and infrastructure is being built right now. Now let's talk about demand. A recent survey showed 25% of institutions plan to add XRP exposure by 2026. But more importantly, XRP saw the largest increase in institutional interest among major tokens. That's not random. Institutions don't chase narratives, they position early. And when interest increases before allocation, that's usually a leading indicator. Now step back and connect everything we've just covered. Quantum threats are accelerating security innovation. Cyber risks are bringing government and institutions in. AI infrastructure is expanding use cases. Security testing is strengthening foundations. Tokenization, real-world assets moving on-chain. Partnerships, financial rails being built. And institutional demand quietly increasing. Individually, these are all signals, but together they form a trend. This isn't about one headline, it's about alignment. And right now, multiple sectors are aligning at the same time. So the real question isn't just, is the market bullish? It's, are you paying attention to what's being built underneath it? If you found value in this breakdown, that's exactly what we do here on Ledger Pulse. Cut through the noise and focus on the signals that matter. Because by the time it's obvious, it's usually already too late. Appreciate you watching, and I'll see you in the next one.